Okay, so welcome to our backtesting session. Today we're going to be going back a week, right down till last Monday. We can then figure out what potential trades we could have entered in this week, or if we couldn't have entered potential trades, and we could essentially compare that to the trades we did enter and see if we missed out or we actually played it quite good this week. So last Monday was the 16th. So we're gonna go right back to the 16th of May, midnight. 16th of May. Now let's go to midnight. There we go. Okay, so this is how we're gonna run it through. So now we're at midnight. We're gonna start up on the 4-hour and we're gonna test it like real results. So we are going to track where we are in the market. Whenever we have a trade entered, we'll mark it down on our spreadsheet over here, and we'll get started. So looking at the 4-hour time frame, what can I see? I can see this wick here, which essentially took out potential liquidity as a sweep over here. I can also see we have liquidity sitting in and around this area of the market. Let's drop down to our 15-minute and just see in a bit more detail. So like I said, liquidity sitting above these highs. Liquidity hasn't been swept yet. Now, this is the zone we were talking about. Now, this is a 4-hour zone. We want to essentially mark up zones on the 15-minute, makes things a bit clearer and a bit more precise. So what can we see? We can see this supply zone mitigated there, structure broke. So that was on the 13th. So yeah, we are on the 15th. So we can see this liquidity wick, which has been reacted off of this inside bar supply zone. So now we could potentially look for areas within that zone. However, we need to be very careful because we have liquidity above here. So chances are price could grab liquidity above. So let's see how it goes. So we have that liquidity rate. Now we can go on to our 1 minute and we're waiting for confirmations for entry. So essentially, I've seen this sort of break of structure, but on the 15-minute, you have to keep in mind. So you had this liquidity sweep over here. So I'm going to mark that up as a sweep. Potential entry off of there. There was an inducement, grab the inducement, secondary inducement, but we've created a new low over here. However, it's not created a completely new low as we've only just tapped into this area. So there could have been some sort of zone we're reacting off of. So we want to be looking at this 15-minute liquidity wick. So what I'd ideally like to see is a failure of this 15-minute demand for a reaction back towards this liquidity wick, and then we can look for really precise 1-minute entries. So for now, I'm just going to watch on the 5-minute. I don't actually trade the 5-minute. I just use it as a smaller time frame than the 15-minute, but still higher than 1 minute. As you can see, we're still reacting from demand. I need to see that demand zone broken for me to have the confirmations to enter any sort of sells. So yes, we're at this supply zone over here. However, we haven't got the confirmations to enter. So this could play out, but that's exactly why we wait for supply. It looks like price went and swept all this liquidity and sweep. So now we know that that 15-minute demand is in control. What caused this break of structure and this liquidity grab? Well, we could argue that it was this order book over here. So let's just clear some of our analysis over here. what are we seeing? We're seeing a swing high over here. We're seeing this supply zone. Now we have to be careful. Yes, we've broken this supply zone, which is marked up over here, but you need to be cautious that that was probably the mitigation, came down, reacted off of this demand zone. However, we haven't broken this original supply. So it could be that supply is still in control and we've just used this area of liquidity as a liquidity sweep. So this is the key thing about trading. You need to take in regard all aspects of uncertainty. So our uncertainty is lying within these wicks right now. So let's mark this up as this being an inducement, this being the actual entry area. So nice rejection of that area. But we need to see some sort of breaks and failures of demand, essentially. Otherwise, there's nothing to confirm potential entries. Now, what I can see is we've got this demand zone in over here. Yeah, it failed. So that could be demand failure. However, this higher time frame 15-minute is in control. So what you could potentially do is look for what caused that break of structure, which was this over here, and potentially, just potentially enter a trade off of that zone. Maybe stops at 1.5 pips, target at that low. However, I wouldn't personally enter this trade. Reason being that 15-minute demand is a lot stronger than this 1-minute supply. So yes, we would be in right now, but again, I'm not in this trade actually. I wouldn't have entered. It would have won, but again, not a valid entry for me. So there you go. You need to see those confirmations. Demand failure, supply is in control. So it's a demand to supply flip. Now that I've seen this new low be formed, we need to see this sort of low fail. And I'm essentially looking for this 1-minute low to fail. And that's coming off of that 15-minute demand. So I want to see that fail. Failed. Nice. Now we can go back to 1 minute. We can see that failure here. Yeah, we can see that as a failure. And now we can look to essentially enter off of potential areas that cause that failure. So whether it be looking at this sort of supply as a zone, which was reacting off of this sort of supply as a zone, which was potentially reacting off this sort of supply as a zone. Who knows? That's a nice supply chain, in my opinion. We have broken 15-minute demand. However, again, that 5-minute demand is there. So we need to be careful, and that 3-minute demand. So it could just be reacting off of this. However, higher time frame, 15-minute demand broke. Now I could potentially be looking for sells off of this area. So I would place my entry at 105, put my stop at about 3 pips, target that weak low that potentially fails to form a new high, and let's see how this plays out. So as you can see, the momentum was too strong. It just pushed down, but that gives me added confirmations. So look, we had liquidity over here. It's very unclear on the higher time frame, but should we move down to maybe the 5-minute, might be able to see it a bit more clearly. There's liquidity over here. And where's it grabbed? Over here. So we're now swept. So we can mark that up as a liquidity sweep. Now, this low over here, we've actually seen to form, in a way, equal lows. It wouldn't be strong enough to call it a sweep exactly, because we still have this demand in play. We need to see that fail if we want to enter any sells. Just looking for that failure, as we've seen, clean failure. But we also have this demand over here, which you could be playing off of. but we don't necessarily need to see this fail. Reason being, on the 15-minute, that demand zone didn't break structure. So it could be a weak area. So let's remove this analysis over here, just clear things up a bit. Now, let's see this in more detail. Go to the 1 minute. Now, let's see where that supply chain started from. So we've talked about this kind of supply chain over here, and it's reacting off of that. Now, have I seen a reaction off of this? I haven't. However, we broke structure over here. We formed a new supply chain over here. That broke, forming a new supply chain over here. Mitigated again, new supply chain over here. Did that get mitigated? No, it did not. However, it could be something in here on the second time frame. So let's take that into factor consideration. Did that tap in just about? Now, let's see if this zone tapped in. That didn't tap in. Okay. Now look, we can see we're in a nice supply chain. We've broken clear structure. However, we are in a bit of range. Could that be fueling a move up? Potentially. So let's go back to 15-minute. And we need to make a rule. We do not enter off of any level that is lower than the break of structure, right? So this is the order block over here that caused that break of structure over here. We do not want to enter off of the wick of that. We want to enter off of the body of that or the body of the other candle that caused that. So let's drop back to our 4 hour. Now, what can we see? We can see that we kind of have that wick to fill. So I am looking for price to go down. Supply is still heavily in control. We've ranged over here. We've kind of had that grab and then we've dropped. That kind of gives me reason to believe we can come back and fuel that move downwards even further. So yeah, I've marked out that order block. So now let's go to the 1 minute. Let's see what's in line with that order block. Oh wait, as we can see, we're in line with this over here, which formed that drop. And what formed that drop? This drop, this zone that formed that drop. Now, it's very unclear, the market right now. So you need to look for potential points of liquidity where market could look to grab. So right now, market is unclear. When market is unclear, you stay out. So let's just monitor it. So look at that cleanly tapped off of our level. But let's see if it breaks through. Doesn't. Okay, it's nice. Now I want to see us go down a bit. Now we broke structure. Now we've got a nice entry area on the 3 minute. We've got this order block over here. So what am I going to do? I'm going to drop to my 1 minute, see if we can get an even more accurate entry. So yes, so what I'm going to do in this scenario is, because there's not a clear order block higher up, but there's a clear one here, I'm going to mark this up as a risk entry. So that's my risk entry. So I'd take a very small trade over here. We like to trade at rounded numbers and it works well with our stop loss. So I'm going to consider that. So that's 3 to 1 risk to reward. That's our risk entry, but keep in mind, we're targeting that 15-minute area. So this zone down here. So I'd be happy to keep it down here usually, but because this demand is still in play, I'm just going to keep it at the low for now. Take that 3 risk to reward. And then my other entry will be around this order block over here. However, we've mitigated that, so it would be kind of pointless. So this is a trade I'd enter because we had this liquidity area swept. So we've had our sweep, we've had this lower area causing a break of structure, giving us our selling bias. Yes, we could target lower, but let's see how this goes. So I'm going to mark this up. It's a 2.5 pip stop. What I don't like is a risk to reward. It's only 3. We like to target higher, but if it's a high probability trade, you'd rather take a high probability trade with a low risk to reward than a low probability trade with a high risk to reward. Okay, let's play this out. Sorry about that. Okay, now we haven't got up to our level. This could just be inducement, so I'm going to keep that order like available. And as you can see, we are coming back up slowly, but liquidity of these highs has now been grabbed. This is all a bit of a range, which is nice to see because a range before a quick grab and a few downwards is normal. But the only thing I can say now is we've got a new low to target. So that could be our low. So now we have a 4.4 risk to reward. So I'm going to mark that up. And that's looking a lot nicer. 4.4 risk to reward. Coming up. 3 nice pushes is what we like to see. That's 1, that's 2. Third one. Ooh. I wouldn't regard that as an entry and tap in. We just tap in, stop loss hit. Okay. So that would be -1R. Loss entry date would have been 16th and exit date would have been 16th. No reason to worry. Now, when we see a loss, we want to see if it breaks this high. Can we see, would this trade have been successful if we covered that high? It still wouldn't have been successful. So now we know we can go into a 15-minute and review. Could that have been a sweep to fuel some sort of upward movement? We don't know. So I'm going to mark this up as a liquidity sweep. And I'm going to mark this up as a demand zone because supply seems to be failing. Let's zoom in a bit. Now we have got that range. We have got that liquidity sweep over there. Keep in mind, supply could still be in control because we are in the 4-hour kind of supply area. Yeah, we are in the 15-minute and 4-hour kind of supply zone. So this was a supply zone, caused that supply zone. That supply zone caused this. This supply zone caused that, but then that supply failed, grab liquidity to the downside. Now we're kind of in a range and we need to see what we're up against. So, okay. So what I'm now seeing in 15 minutes, yes, demand is still in control. So I can potentially look for demand entries now. So we've marked up that 15-minute demand over there. I want to see this high over here fail. There it goes. High failed. Are we going to come back down? Or even that high failed. Perfect. Now I'd look to enter buy as we've had this 15-minute demand, tap in, move off, inducement formed. So this is just liquidity over here. And we can look to buy from here. 2.5 stop loss. Target that high. Okay, 4.6 risk reward. Let's mark it up. Keep in mind, this is early in the morning on 16th of May, so it is well within our trading hours. So it would be a very valid trade. Stop loss hit anyway, so I didn't even mark up the rest. So stop loss hit, -1. Loss, 2.5 stop loss. I like to target between a 2 and 4, maybe 5 pip stop loss, but most of the time 2 and 4 is kind of the sweet spot. So now we've had a long fail and we've had a short fail. So now we need to review, and we can kind of say for sure we're in a range because we've had a long and short fail on a 15-minute time frame. So let's see, what are we looking at? So we've got that liquidity wick, we've tapped in, came up, grabbed the liquidity above these highs as a sweep, formed some liquidity down below, grabbed that, came back up, formed this demand zone, which is really, really clean actually. And we haven't broken demand yet. Although our trade failed, we haven't yet broken demand. So could it be that we're coming down to this level? This inside bar? Potentially. So let's consider the fact that we've created a new high and give that as a reason for entering a buy. It's very tight stops, which I'm not liking. I don't like to trade anything less than 2 pips. Reason being the spreads, but usually Euro US dollar spreads are 1 pip, but can sometimes stretch to 2. So because the risk to reward is so high and chances are that spreads may not take me out, I would enter this with less risk. But remember, in backtesting, we use static risk. So I am going to mark it up. It is a bit of a risky trade. Again, you have to be in a position where you're willing to take those risky trades for the reason being that they are very high probability trades. Yeah, okay. So let's okay, so it kind of left without us. So it looked like it tested off of this sort of area. So potentially I could have just entered off the low of that, maybe at 50. That would have still given me a 7.25 risk to reward. Oh well, we don't kind of feel down after losses because we know there's always another trade. However, we have formed liquidity yet again. So I'm going to mark that up as liquidity. Nice. Now we are still in that demand because, as you can see on the 15-minute, we've tested. I'm going to kind of remove this zone to that side. Work out there. As you can see, 15-minute demand still in play. So demand is still kind of grabbing my attention more than anything. Yes, higher time frame is saying we're bearish, so we could be in a higher time frame supply. But for now, I'm looking at sort of a low time frame demand. So we've had that successfully went. Let's mark up our next demand zone. Yes, we're looking at the 5-minute time frame. Dropping down to 1 minute. That's kind of what we're looking at. But keep in mind that was kind of including that, so we need to be careful. But again, we like to take tight risk to reward trades. So that's a nice 2.5 pips, and there's liquidity above to target. That's a really nice trade. 5 risk to reward. Let's see how this plays out. Again, we're playing off of demand. That's my reason for this trade. Demand is in control on the 15-minute at least. And although on the 4-hour we are bearish, we can kind of take into consideration that we've had plenty of supply failures. So let's mark this up on our journal. Oh, I forgot to write this in as a loss. -1. Great, I didn't screenshot that. Okay, we're just gonna have to go back. It's important to journal your trades, wins and losses. So, oh, hold on, we didn't enter the trade because it just went without us. So we can clear that line because it was never actually a trade that we entered upon. So yeah, we can just clear this line. Yep, so we have this trade marked up. Liquidity to target is all looking quite good in this one. Again, it's a 2.5 pip stop. So again, looking nice. It is a long, is on Euro US dollar. Is it within our trading hours? Yeah, most definitely. split out. Okay, new high. We grab liquidity, which is kind of a red flag for me, because now the fact that we've grabbed liquidity means that we have no reason for, even if price does come back down here, we have no reason for price to get back up there. So invalid trade now. So that's not a trade. So I'm just gonna do that and we'll re-review on the 15-minute. Now, amazing. What can we see? We've had this supply fail. So demand is in control on the 15-minute. That demand has played out beautifully. Yes, we have kind of like this 15-minute liquidity wick, I guess. Let's check on the 5-minute for a nice entry. There we go, there's a nice entry. Maybe a 3-minute. Nothing too clean. Again, nothing too clean. So back on the 15-minute, what can we see that broke that high? In fact, it's also broken this high, which is really nice. We can see this area. That's an area that also broke. So let's kind of see it come down. I want to see some sort of rejection. Nice. Now we can go to 1 minute. Clean entry area anywhere. Yes, I guess you can call this an entry area. Let's be really careful here. Really careful. That was a wick entry. Nice impulse move to cause that. So I'm going. We've caused this kind of 1 minute break of structure. So I'm going to look towards this order block as my entry. I'm going to cover this low though, just for entry purposes. That'll be my entry. Stop loss around 3.5. I'm going to put it as 4. Target, of course, there is a lot of liquidity above these highs, loads of wicks. 4.03 restore, not bad. However, does price have a reason to go that low, considering we kind of have this high? So again, this is a 4 pip stop, but what if I was to guarantee an entry by entering at like 105? Again, I'm not saying it does guarantee an entry. I am saying there's a high chance, but we can also move our stop down to 3.5 and risk to reward increases. So it's 4.46 here. Previously, it was 4.03. So we are getting an extra, what, 0.43 out of it. So that's our trade. So again, this is only on a Monday. So look. That's my trade. Here's a long 2.5. It's a 4 pip stop. Let's play it out. Okay, nice. We're going up. Ooh. Okay, we ranged nicely. I like that. We could have come down though. Market just doesn't seem to want to at this rate. Maybe bullish momentum is just too high, which kind of tells me that this week has been a good week in terms of our trading day and how many losses we've taken. So there is another potential entry up here around 35. Stops around 4.5, maybe 5 pips. Not clean targets, so even, yeah, not clean targets. So I wouldn't have actually entered into this. Yes, it might hit my take profit, yeah. Because sometimes we don't actually consider those to be trades, but again, this is still valid, this trade. That could have just been an inducement. This could be liquidity. Liquidity over here. So this trade is still completely valid. Yeah, no reason why we can't enter that. Now I believe it is invalid, but nice demand chain is forming. We've got this area of demand, reacted there, this area of demand. Very close to reacting there. Could that be an inducement for this entry potentially? But we can also consider entries off of here as the move has been occurring really cleanly. So we can kind of look at this. Target we don't know yet. We want to see it go a bit higher potentially. Yes, we've entered, but again, not looking take that trade again. There was just no confirmations. Again here, oops, yeah, we're just breaking. So this trade over here, still what I'm looking at. Still what I'm looking at, around 105. I believe it was a something stop loss. It was a 4 pip stop loss. Yeah, 4 pip stop loss, and my target was up here. So 6.98 is looking a lot nicer now. So what I'm going to do is mark this up as a trade, see if it taps in or not. Again, we still haven't entered that third trade. We are ranging very heavily, to be honest. Okay, tapped in. We're in. We entered on 16th of May. Right, because it's the 1 minute time frame, I'm going to assume that we are going to exit on 16th of May just for these backtesting purposes. Now let's see how this plays out. Ooh, stop loss hit. -1 loss. 3 losses on a Monday. This is where you should be looking to stop trading unless there's a very, 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 very valid setup. Again, you see this whole region could just be potential areas of liquidity. It's not too clear right now. So now we go back to this demand zone, which is actually reacting off of a really nice chain. It is still valid. So let's look at potential entries off of like numbers. I'm gonna look for that kind of an entry. Stops around 5.5 pips, not too bad. Targets. Wouldn't target this high initially. 6. It's still a nice risk to reward. Looking on the 15-minute, there's no reason why it shouldn't work out. You would want to target this body essentially, but yeah, let's consider it like that. You need to look at bodies and wick formations and just be very clear with what you're trying to trade the trend. So let's mark this up. Chart image, new trade, stop losses 5.5 pips. Again, I'm going to assume okay, let's put it out. Just in. Nice. Okay. Now we move to break even because we've broken the structure here. So if anything, we're at least break even. So break our new stop loss is at this. So look how clean that entry was. That's 0 drawdown, basically. Stop loss. Even we made a new high. Now we could look for potential re-entries. Yes, that's a potential re-entry zone, but I'm kind of looking more towards this. Yes, that is a very nice re-entry actually. We could just move from there. Yeah, so that's an inducement. Now we could look for re-entries off of this. Let's just kind of consider it. Okay, there we go. So our re-entry would have been over here. About 40, stop loss at where our current break-even price is. So there, and our same target. I'd look to target that area there. Okay. So now we can mark this up as a separate trade. So I just hide it for this screenshot. Copy link to chart image. That'll be another trade. And again, it's this sort of thing. And the stop loss is 4 pips. So you're scaling it. This is scaling it at this point. And let's remove that now. Okay, let's see how it goes. Stop loss hit for this one. So you would be -1. stop loss hit for the second one. However, it's at break even, so you'd only be looking at 0. Now we can just screenshot this as a pair. Mark that in. Review on the 15-minute. Have we done anything wrong? That low hasn't been broken, so demand could still be in control. And this is the issue with liquidity. Now, chances are we are going to go and take profit. See, just want to see if it plays out. And there you go. I believe that could have, oof, very close. Let's see if it plays out. There's liquidity above these highs, so it should have reason to take profit. There you go. So there you go. Just a quick liquidity grab to downside, then the move started, right? So you need to see that failure. So again, in one day, so again, we're still on the 16th. We're on the evening of the 16th. So essentially, on a Monday, you would have been -4R. But keep in mind, if you're trading a funded account, that's only 2R because you'd be trading half risk. So -2R. And keep in mind, 4 trades, 1 break even, 1 loss on a Monday. At this point, you should get off the charts. I'd say after 3 losses, you get off the charts. But if there's a nice setup, go for 4. But then again, there was 1 nice setup, which was that last one. Did get well into profit before actually breaking down. So look at that entry. You would have been at this point, even if you put your target at this area, you would have made 2.73. And if you put your target essentially where it all went wrong, you would have been 3.96 through, 4R up. So had that been a win, you would have been looking at being 1R in profit on a Monday, which isn't bad. That's on a 100K account. That's 1K.